Thank you, Eamon. Over the next 25 minutes, you're going to be treated to an overview from the Investment, Fiduciary and Pension Division. I'm going to start with insights taken from our regulatory returns. This is going to be followed by a video from Alison Gavey and Eamon Finity, giving updates on our operations and supervision. Then Martin McHugh will present at the lectern some policy highlights. Then, having heard from all of my deputy directors, we're going to conclude with a short animation, which is a form of self-assurance, seeking to share with you what we consider to be key business checks, and we hope they'll be useful prompts for your business. Since I've been appointed as director of the newly merged division, I've been focusing on digging deeper into the data we hold. The accuracy of the data you submit to us, therefore, is crucial. Put simply, rubbish in leads to rubbish out. I consider that we've collectively entered into a contract. You supply us with data. This enables us to be effective regulators. We analyse the data. We identify trends, outliers. It informs our supervisory engagement with you. But equally, I believe it's important that we share our key findings with you. To recap, the Investment, Fiduciary and Pension Division supervises approximately 1,425 licensees, plus over 800 funds and around 2,400 pension schemes. The numbers on the slide represent a wide variety of business models, ownership structures, and indeed firms of all different shapes and sizes. This illustrates the diversity and substance of all of these important sectors. Currently, there are 3,820 staff employed in the fiduciary sector and 1,594 in the investment sector. This leads to a combined total of 5,414 staff, which out of a total working population of 31,000, 17.5% is a very significant proportion of our community. So digging a little deeper into our funds. Most Guernsey funds are closed-ended, 80% by value and 82% by number of schemes, and they've accounted for most of our fund growth. This chart illustrates our current fund universe, and it's based on the year that that fund was launched. The columns represents the fund's NAV split between closed-ended in blue and open-ended in orange. And the dots along the top represent the total number of funds that were launched in that year that still exist today. This shows that the majority of funds that are more than 14 years old are open-ended. Closed-ended funds, the bulk of Guernsey's fund sector, are almost entirely younger, and assuming that the closed-ended funds have an average life expectancy, this slide gives us an insight, an indication into our future fund sector, and replacement rates are clearly key. You'll see from the top right dot that 2018 was a bumper year, especially quarter 4 for new funds being launched. Clearly, it's going to take a number of years for the NAV of these funds to build up, as for example, PE funds will only call investment when an acquisition is imminent. And we understand many funds are still looking for suitable targets. Equally, if a fund isn't launched until, say, quarter 4 2018, we wouldn't necessarily expect our first quarterly return to be until the following quarter, and some funds that are authorised or registered don't ever actually take off. Now, the average fund NAV has risen by a quarter over the last 3 years to £275 million. Whilst £275 million is the average fund value, 15% of our funds have a NAV of less than 5 million, and 6% of funds have a NAV greater than 1 billion. We have been analysing the future potential funds picture and have identified 3 key areas to watch. The pie chart shows us that, as suspected, private equity is the largest type of investment for Guernsey funds. This is a consistent trend looking back over previous years of data. The impact of this concentration in PE in our future remains to be seen. Currently, Secondly, the currency breakdown of our funds illustrates that we are not immune from shocks linked to global events, for example, Brexit. And we need to be conscious of the impact these FX fluctuations can have on the accumulated NAV performance. Therefore, with 77% of Guernsey funds being denominated in euros or US dollars, if the sterling strengthens, we must be prepared for a direct correlation on the value of the Guernsey fund sector. Gearing is also a factor which can influence asset values and the sector's robustness to economic shocks. And the vast majority of Guernsey funds have little or no gearing. Further illustration of Guernsey's private equity focus and our professional investor base is illustrated by the fact that most Guernsey funds are not listed on a stock exchange, 81% by volume, not listed on the stock exchange. And 2/3 of funds have fewer than 50 investors. So now to turn to fiduciary. This chart illustrates a trend that has been apparent in both the fiduciary and investment sectors. That as a jurisdiction, we have moved towards fewer, more complex structures for generally the higher net worth. The green and red lines reflect the reducing number of trustee and directorship appointments held by fiduciary licensees. And yet there is continued growth in the value, as represented by the blue line, in the assets under fiduciary regulated activity. Again, I'd reiterate the impact of currency fluctuations, and I'm also cautious as to the accuracy of asset values here. However, the trend is clear. We are continuing to move towards fewer, larger, more complex structures. Whilst the number of fiduciary licensees remains broadly constant in the bailiwick, we continue to observe growth in both terms of assets and turnover in our international finance groups. And we expect this to be a trend we continue to see in the future. As in previous years, we share your data reflecting the global geographical source of new fiduciary business. This chart represents the residence of the settler of a trust, founder of a foundation, or beneficial owner of a company. The size of the circles or dots on the map roughly reflect the proportionate size of business, new business, coming from a particular jurisdiction. And the colour of the circle is also significant. The black circle illustrates that new business is roughly constant with last year's figures. For example, 40% of new business is from the UK. The red circles illustrate slight decline. For example, new business from Europe in 2018 was 8%, compared with 14% the year before. And the green circles indicate moderate growth. For example, 8% of new business came from South Africa last year, compared to 5% the year before. We've been drilling down into the fiduciary annual return data to identify areas of regulatory focus, trends, and outliers, including, for example, the average number of appointments held, whether they be by natural persons, which this slide reflects, or by corporate legal persons. Through our analysis of the data, we can see a broad spread of the number of personal appointments held by individuals employed as fiduciary licensees, reflecting the diversity of the client base and practices across the sector. This chart is based on average personal appointments by licensee. Therefore, if a firm employs 100 staff and only 10 employees hold 10 personal appointments each, this would be a licensee average of 1. The first column shows us that 44 firms have on average up to 5 personal appointments per member of staff, whereas the last column represents that 5 licensees have on average 35 or more personal appointments per member of staff. And it's likely we'll be following up with these licensees in due course. We appreciate that the amount of work associated with each appointment will vary. However, as a piece of self-assurance, we recommend that you consider the number of appointments that either you or individuals in your organisation hold or undertake, either personally, directly, or through a corporate director. Corporate directors, again, not reflect on the slide at all. And the appropriateness of those appointments, given director responsibilities and other roles that these individuals are likely to be undertaking. Finally, following the extension of the fiduciary law in 2017 and the introduction of pension rules, we have started to receive and analyse pension returns. We're still in an early phase and we haven't yet received our first annual returns. However, the quarterly returns reflect that we currently have 2,400 schemes with approximately 96,000 members. This slide provides a breakdown of the average fund value per member. I can also say that broadly 90% of schemes have less than 10 members, and the schemes with the greatest asset values are the international corporate schemes. We look forward to further analysis of the Guernsey pension sector in the years ahead, as our data and our on-site supervision is developed. And now I'm going to hand over to Alison and Eamon via video link.
So Ali, 6 months into the new amalgamated division, what do you think are the key milestones we've achieved?
Well, I think there have been two major achievements. First of all, the merging of the two divisions gave us the opportunity to adopt a more integrated approach to our supervision. And then we've also developed a group supervision model for some of our larger licensees. It's also been business as usual. We've kept on track with the day-to-day supervision. And in the last 6 months, we've undertaken 11 full risk assessments and engagements, placed 37 risk mitigation programme action points on firms, and taken part in 20 thematics.
So, looking a little deeper at the risk types for the investment and fiduciary RMPs that were created during 2018, as we can see, issues with governance, operational, financial crime and strategy all feature highly. And another interesting area is with conduct risk, where we had 14 instances. And it was interesting to note that all but one of those related to the fiduciary sector. Clearly our audience will know which risk most affect their own businesses. So Ali, how has the team been structured and what's been planned for the rest of 2019?
That's a really good question. The division has been organised into 3 supervisory teams based on impact levels and 1 policy team. Each team has staff with both fiduciary and investment experience. This year, we have ambitious but achievable plans. In addition to our standard engagement, thematics always form a big part of supervision. Last year, we conducted a beneficial ownership thematic with financial crime, and I'm really pleased to say the results are encouraging and help to evidence the substance behind the financial services in the bailiwick. Questionnaires were sent to all full and personal fiduciaries, and we visited firms that act as resident agent for over 4,000 Guernsey and Alderney legal persons. 381 files were reviewed, and the headline is that in all cases the beneficial owners were correctly verified. However, a few learning points were identified, and the thematic results are due to be published shortly.
And as you know, the division is also currently assisting with the commission-wide cyber thematic, as IT systems and security, as we all know, are increasingly critical for all businesses, the Commission included. Also, the results of the thematic on pension arrangements in the bailiwick were published since our last industry presentation. That thematic was mainly an information gathering exercise to allow us to assess current industry practice, to look at the challenges facing our firms in the sector, and to discuss known issues. And as part of that thematic, we also created a pensions help sheet. So Ali, I'm sure our audience at St James are on the edge of their seats. So do you care to share any clues as to the upcoming thematics, or are you going for the element of surprise?
Well, the fiduciary thematic for 2019 will be on demonstrating director duties when utilising a corporate director. It's an area we haven't reviewed previously as a thematic. There are also a number of ideas for the second thematic. Outsourcing, especially when there's more than one link in the outsourcing chain, fiduciary duty in respect of tax advice, suitability of pension advice, or perhaps fintech and innovation. Do you want to pick a favourite?
No thanks. I picked Man United to win the Premiership and Andy Murray to win Wimbledon. In all seriousness, our thematic reports are all published and provide a very useful resource for our licensees to conduct some self-assurance, to consider their own approach with that of industry practice on a large range of topics. Moving to the topic of innovation, the Guernsey Green Fund is a world first, and interest in this area is building, and together with the new listing section on the International Stock Exchange and green insurance should mean that Guernsey is really well placed for the future.
The quality and accuracy of data returns are absolutely crucial as they drive our supervisory model and provide data on which we rely. We maintain a close watch on submissions and actively consider the depth and breadth of information requested. Returns are used to study trends across the sectors and assess firms on an individual basis. We listen to industry and changes have been made to the investment annual return as a result. However, accurate and timely returns are vital, and we're going to monitor submissions more closely to ensure that this is achieved in the future.
So overall, the last 6 months have been busy, and the next 6 don't look quiet either. I'm sure our licensees are excited at the prospects of a full risk assessment, an engagement visit, or indeed a thematic visit, and will welcome us with open arms and a large supply of chocolate biscuits.
As the Deputy Director responsible for investment, fiduciary and pensions policy, I must always have in mind the Commission's core aims. The Commission has a number of functions defined by statute, including effective supervision, the maintenance of the bailiwick's financial services sector, protection of the public interest and protection of the public against financial loss. We also take into account protection and enhancement of the reputation of the bailiwick as a financial centre. Translating these objectives into a programme of policy initiatives is not easy, and various factors are relevant. In the first instance, we look to the international standard setters who promote common global principles for effective supervision, such as IOSCO, GIFIX and IOPS. So isn't the solution therefore simple? Shouldn't the Commission simply copy the international frameworks, thereby securing both effective supervision and the good reputation of the bailiwick? It is, of course, not quite as straightforward as that. We must also appreciate how these standards have been interpreted and implemented by our peers. Like every jurisdiction, Guernsey must make an appropriate translation of international standards into local regulation, and in so doing, ensure that industry can continue to operate on a level playing field internationally. Maintenance of the reputation of the bailiwick as a financial centre requires first that the bailiwick continues to operate as a financial centre. But we must also consider the nature of the Guernsey market. Certain international standards are designed for large, diversified economies with a focus on domestic business and do not cater for smaller, specialised international financial centres. We must ensure that the regulatory regime addresses the risks in our market. The policy team does not operate in a silo. We form part of the same division as the supervisors, and through regular interaction we stay abreast of new emerging types of business and associated risks. We also regularly engage with external stakeholders, with government, with Guernsey Finance and of course with industry, bilaterally and through industry associations such as GIFA, GAT and GAP. Another factor that cannot be ignored is the finite nature of our resources. The same principles which apply to supervision also apply to policy setting. In making the decision to allocate time and resource, consideration of the impact on our objectives must be taken into account, alongside the risk posed by inaction. But we recognise that your resources are limited too. Changes to policy must be justifiable, as they can create real and substantial costs for our licensees in terms of senior management time, compliance staff, changes to procedures, systems, and so on. All of the factors I've just discussed contribute to the formulation of the Commission's policy programme. So what does this look like for 2019? In the fiduciary sector, the major policy initiative has been the issuance of a discussion paper proposing the creation of a consolidated fiduciary handbook. The period for comments on this paper remains open until 30th of April. With respect to pensions, again last month the Commission published its comments on feedback received from stakeholders on the pension rules. Overall, no fundamental change in policy are proposed, and the majority of amendments proposed are clarificatory in nature or relate to refinement of drafting. Looking to the investment sector, much of the team's time so far this year has been given over to consideration of potential enhancements to the jurisdiction's fund offering. We're also looking to enhance existing parts of the framework, and within this category, I would highlight proposed revision to prospectus rules and registered collective investment scheme rules. All of these proposals will be subject to consultation, and I thought it might be useful to briefly highlight some key elements of policy-making process and governance. Significant projects involving the creation of new rules must pass formal and thorough internal review procedures, ensuring a consistent approach to policy making across the Commission. Only then can the most important part of the process begin: consultation. Given my audience today, you might think that I'm engaging in flattery by emphasising the value of industry consultation, but that is not the case. The attendees here today represent a wide breadth and depth of knowledge and expertise, not to mention countless years of industry experience. Tapping such a valuable resource is vital. Over the years, both in this jurisdiction and elsewhere, there is one common feature to every consultation I have run, and that is that I was always left wanting more feedback. If stakeholders choose not to participate in a consultation, my default assumption is that they are happy with the proposal. But I understand that that may not always be the case. There may be other reasons for non-participation. Responding to the Commission's consultations does take time that you could otherwise dedicate to running your business. I understand that, but would argue that such time will be considerably less than that spent later on implementing a rule which does not work for your business. Another argument I have heard is that the regulator starts with a preconceived idea and has no interest in listening. On the first charge, to some extent, it is true. We do begin with an idea of what we want to achieve and how we intend to go about it, but that should not be misunderstood as a reluctance to listen. A commitment to listen should not be confused with a commitment to always agree. But the only way we can fully understand the impact of proposals, the potential pitfalls, the unforeseen consequences, the consensus view, is with your engagement. Whether it is a formal written response, involvement with your industry association, or even a phone call or meeting with me or my team, please know that your engagement is always valued and taken into account. Following consultation, all comments are reviewed and considered carefully, and this process feeds into the drafting and publication of final rules. In this way, working with your cooperation, we aim to maintain a policy framework across sectors which both maintains international standards and protects and enhances confidence in and the reputation of the bailiwick. Thank you for your time today. And now, as already mentioned by Gillian, over to a short animation to conclude the division's regulatory roundup. Thank you.
Picture the scene. Imagine buying a financial services business is like buying a car. In advance of the purchase, you should check the history of the car. Has it been involved in a crash? Does it have outstanding finance? Has it been window dressed for a sale with rust covered up but not treated? In our world, this equates to conducting due diligence on prospective purchases and clients before purchasing. Review client files, review PI notifications, review regulatory correspondence, and consider if it's being sold too cheaply or if the value is overinflated. Why are you buying the vehicle? Is it a lifestyle choice? Have you been told you must buy it from someone more senior elsewhere in group? Go in with your eyes wide open as to your motivation and the condition of the vehicle. Basic fuel and oil checks. You can't get far without the right levels of staff and resources. But what is the right level? Just like a Ferrari needs a different type of fuel to a Nissan Leaf, so a large firm with a low risk appetite requires different resources to a small firm with a high risk appetite. You should review your risk appetite in the context of your resources. What you intend to do should equate to how many and what type of staff you have. The wrong balance leads to problems like unserviced and unhappy clients. Now imagine, once purchased, you take your vehicle for a service. Martin the mechanic is going to perform a number of checks, which could equally apply to your business. Emissions test. Is your car a pollutant? How many complaints or alerts are you receiving? No complaints or alerts may be indicative of incorrect reporting, like VW found with diesel emissions. A high level can equally be a sign there's a problem. Brake tests. Can your vehicle stop if it needs to? Do you have sufficient capital and PI insurance? We're looking for an orderly wind down in all circumstances. There's little point finding out that your brakes don't work when you try to apply them. Equally, there's little point having PI policy that doesn't cover what you're expecting. Do your windscreen wipers and headlights work? Can you see where you're going, or is your view obscured? Conflicts of interest can pop up and distract. Other businesses seem to spend time looking in the rearview mirror or at themselves and don't pay enough attention to the road ahead. Warning lights on the dashboard means your car needs to slow down or stop. Are your warning lights working? Does your management information identify issues? Do you have staff off with stress, or are you under-resourced? Are you reviewing breach reporting and responding if it's indicating that your business is running too hot? Is your management information ensuring you make informed decisions as a board? What did the previous service say? Are there repeat breaches? Have auditors been flagging significant concerns in management letters which have been ignored? Has the Commission raised key red flags at industry presentations, thematics, annual reports, or directly in visit feedback which has been overlooked? Now, Martin the mechanic is particularly nosy, but conscientious, and thus as part of this service he doesn't just want to satisfy himself that the vehicle's working, but also wants to check whether it's being driven properly. Martin wants to understand about the car's drivers. Are you one of the drivers? Are you a safe driver that sticks to the speed limit, or are you a chancer that aims to be close enough? From our analysis, it's often the safer drivers that have fewer accidents, avoid hazards, and are more profitable. Do you know who is driving and giving directions? Are you along just for the ride? You don't care where you're going as long as it's a nice day out? Are you sitting in the back of a chauffeur-driven limo with your feet up? Too often, the cause of problems we identify is the governance of the firm. The wrong driver, the driver asleep at the wheel, a bystander shouting directions. Ultimately, if you're one of the drivers, you are responsible for the firm. Assuming you're the driver, do you have the right skill set to drive that particular vehicle? Are you, for example, an experienced mini driver and now you've been asked to drive a school bus? Do you have the right licence? Do you really need a heavy goods vehicle licence but you only have a moped CBT? We've been surprised at recent examples of unregulated activity. This is an area we're going to continue to be tough on as it poses an unacceptable risk. We all want well-run businesses, whatever the weather conditions. At the Commission, we have the benefit of seeing all financial services firms in the bailiwick, and therefore hope that Martin the mechanic has helped give some steers on what we and you should be looking out for. But what happened to Martin the mechanic? Unfortunately, he left his keys in his ignition while he was undertaking your service. When he returned, his car was gone. A reminder to always remember cybersecurity.